What's up, everybody? Michael Silva here. The time has come. Tomorrow, the market's going to be opening up with some new macro data coming out. So we're going to talk about what the options market is pricing in as far as risk looking into this day. And keep in mind, you better be back here on Thursday's close because on Friday, we have more macro data dropping. We're going to talk about the updated daily expected moves and kind of how I position myself into this. I know a lot of people have been talking about, hey, the market's outside of their weekly expected moves. Does this mean that I should short it? And I've been getting that question a lot, so I'll just tell you exactly what I told people on Twitter and in my Discord community, what it is that I'm doing. So that's what we're going to talk about on today's stock market brief. We'll start here looking at the 11 sectors that make up the SP500. Tech led the way. Okay, so it was more of a risk-on type day where you saw utilities, more of a risk-off asset, down there towards the bottom. Overall, though, if you look at the index products, the Dow was basically flat on the day. S&P 500 was up ever so slightly. The Nasdaq was up about 0.5%. So it was just a calm day before we get into some real macro reports. And if you look at this from a daily expected move, we talked about these levels yesterday. What happened? Well, the price moved up. We came into around the daily expected move. Price started pushing back down. We started getting back up, pushing back down, and making a series of some higher lows there, building into that daily expected move. We closed at 451, basically flat. And there was actually, if you look at dated expirations, there was a massive GEX level there at 451, and it basically just remained pinned all day long. Okay, so I got the question, now that we're above the two, he was talking about yesterday how we had a 2 sigma move, but we're outside of the weekly levels. Do you think the SPY could fall back into the weekly risk range someday this week? I was wondering if it's worth buying some puts and what level I should potentially start buying. So yes, we are outside of the weekly expected move. There's a 68% probability that we close within this range. So there's technically a higher statistical probability that we do pull back in or at least come back to 446 this week. So it really comes down to preference if you do want to trade, obviously, to the short side. But I want to reiterate this, that we've been preparing for a bounce in the markets. That's, if you go back and watch, we were talking about very big mega cap stocks setting up for a potential bounce, right? And they kind of shook out a little bit, but then they started ripping. Well, the way that I answered this was this. So I don't know, right? So they said, are you so down for the rest of the week, or we keep on ripping, meaning that we're outside the weekly expected moves. So no one really knows with absolute certainty, especially moving into some catalyst, right? It's a very binary event. You know, it could go either way on us. So I locked in some profits on the move. I'm keeping some runners on. I'm not adding here, but I will look to add on pullbacks and consolidation. And I'll tell you that more specifically why when we update you on the 15-minute time frame. And as far as shorting, I'm not trying to capture alpha from the short side at this time. That's really just my preference right now, even though that there's a strong possibility that we pull back in, right? That's simply just preference to the individual trader. Now, it's not just the SPY that's outside of the weekly expected move. These are the weekly expected move of various assets that have a lot of options volume that I track and I share with the Patreon and my Discord community. And I just added this column here just to give a quick idea of where we closed currently on August 30th. And are we outside of the risk range, meaning outside to the upside? Are we down beneath it, or are we inside the range? So if we're above the risk range, this will highlight to the color green. If we're inside of it, it'll highlight yellow. If we're outside to the bottom, it's red. And what you'll notice here, there is no red, right? Because we've seen a big bounce in the markets. There's a couple yellow pockets, but the majority of these assets are actually already outside of their weekly expected moves. And this is taking place moving into a catalyst. So to me, I still think that there's a higher, obviously there's a higher statistic probability that we come in. I don't know if that's going to be tomorrow or the next day, but I wanted to call out that SPX, SPY, Qs, IWM, DIA, which is the diamonds, Dow Jones Industrial Average, they're all outside of it. You have some mega caps like Apple, which is trading outside, Google, Tesla, Nvidia, Netflix. So when I look at this, I think to myself, okay, well, I wouldn't be going long at this specific moment blindly while we're here on this specific, going into these catalysts. That's how I read into this data. Now, if we had some potential catalysts and we were towards the lower range and we had, potentially some momentum where we're just pulling back into a potential higher low, that would be something that I'd be looking into to look for various setups. Now, there's going to be two important assets that we want to keep an eye on while these reports drop that really help propel the market up. And those are the yields, right? So 10-year yield, you can look at TNX. And TNX has been pulling up into this prior area of resistance. Some people might call this a potential double top. In my opinion, this is not a double top. A double top, this is just testing a prior area of resistance. A double top would be if we actually came down and closed through this area. Just like a double bottom, right? This is not a double bottom, but a double bottom would be if we crack through this, then we'd see the double bottom, and then we'd see the entry point right there. That's just, I guess that just comes down to the individual trader, what they say. But you can see the 10-year yield has been putting in higher lows, and we're pulling back into this area. So as it's been coming off, it's been helping out growthy names. But it wasn't just the 10-year yield, it's the dollar. The dollar took another hit today, so the dollar has been pulling back, and that really helps amplify this move in the SP 500 and various other assets. But as we're moving into these data reports, as we stated yesterday, what are the kind of volatility ranges? This indicator's originally designed by Joe Catanzara, but what I did was I extracted into a different form, bulk data, so I can really see a fractal view, an overview of the markets. And what you're seeing here is S&P 500 has, more limited upside to the upper range of this. This is like saying, hey, the S&P 500 is at this upper Bollinger Band. Okay, so think of it kind of like that, but it's a little bit more, it reacts a little bit quicker than a Bollinger Band. Volatility is at its lower range, right? So if volatility bounces or moves to the middle, that can bring, obviously, the S&P 500 down. You have the 10-year yield, which is near the low. You have high yield, which is up at the high. You have TLT, obviously, because TNX is down. And then you have the dollar kind of near and around its lower area to at this current moment, okay? So if the dollar moves back up, this could bring down various assets. If the TNX starts moving back up again, right? Obviously, you'll see something like bonds go down, and then potentially even high yield right there. And then you can obviously see the S&P 500 or various growthy names potentially take a hit too. Now, as we go into tomorrow, the DEX is currently green. I'm not going to get too much into that, but it's been green for the last 3 days, and we've been talking about that. So right now it's, a very small green bar, but nonetheless, more of a bullish tilt going into tomorrow. So if I open this chart up and I say, okay, if we have a little bit bullish tilt tomorrow, we are above an inclining 5-day moving average. The move is could be potentially exhausted, but what you'll notice here from a technical standpoint is you have expansion, and now you have a series of higher lows contracting, right? So this could be an ascending triangle where, hey, boom, we can come and break out and come tag this 453, which is the upper daily expected move. But if we start breaking down, start looking at the lower daily expected move at 448 to potentially 446 to come retest the upper weekly expected move. And that's actually in confluence. So if you are looking to potentially look for pullbacks or consolidation and so forth to add to positions, you can look at that green line, which is kind of hidden behind the weekly expected move. That's the quarter to date anchored VWAP. And then you have the week to date right here too as well. And then just below that is the month to date and the 5-day moving average starting to incline. So this could be a lot of area of confluence if the market were to pull back down into this range to set up for a potential another move. Now, as I've stated, this could be a little bit exhausted here at some point in the very near future. You do have that RSI divergence that's taking place. And then from a weekly perspective, being up 2.48% on the week already, the upside to the next area of resistance on the SPX is around 45.27. And what you'll notice here is if I just draw a horizontal line across the screen, you can see that was the high for this week. And then it was actually the low point for this week. So resistance turns into support. And once it was broken, it got retested right here as a level of resistance. And this right here is a very strong move into a level that's acted as support and resistance before. So if we push up a little bit further, this area could act as a potential area of resistance. Okay, so that'd be a level to watch for on the upside if you're interested. If I take a look at Bookmap and I look at ES, Bookmap lets you see really the order book. It visualizes behind the candlestick, things that you can't see if you just look at a candlestick chart. And there's not much going on. There's a couple interesting levels here, like 46.50. That opened up today about midday, so there's about 580 contracts up there. And then down here at 43.05-ish, there's about 500 contracts down there, and that's been there for multiple days. So I would just say, hey, if we get some outsized moves, potentially pay attention to these type of levels. I don't think we're going to hit there tomorrow, but hey, who knows how the market's going to react, right? Last thing I want to just close with is these are the daily expected moves for going into tomorrow for other products. So you have the SPX, the SPY, and the Qs. I know I shared the SPYs, but if you want to screenshot this and add it to your charts, this is something that I just share on a daily basis with my Discord/Patreon group. And I figured because we're moving into a period with a little bit more volatility, if you want to just have these levels on your charts, by all means, take a screenshot and add them. That's all I got for you on today's episode. See you later.